Welcome to the Capital News. I'm your host, Alex Karitis. Today is Thursday, September 10th, 2020. Thank you so much for joining me. The title of today's podcast, Small Business Pulse Check. I'm going to read an article out of Axios, who is focusing on a survey from Goldman Sachs, the same survey that we have discussed here several times before. So there's some updates to that, so I thought that would be interesting to discuss, especially since it is Thursday already. And we are going to do our weekly Thursday data dump discussion and analysis, initial jobless claims, Federal Reserve's balance sheet, money stock, all that stuff. So we're going to get into that. Market performance, I'm sure many of you have heard the news from the ECB, the European Central Bank, keeping its main refinancing rate unchanged at 0% and pledging to buy up to 1.35, where they come up with these numbers, we'll never know, 1.35 trillion euros worth of debt through June of 2021 under its pandemic emergency purchase program. The interest rates on the marginal lending facility and the deposit facility will also remain steady at 0.25%, 25 basis points, and at negative 50 basis points, respectively. President Christine Lagarde of the ECB said during the regular press conference that the ECB discussed the recent appreciation of the euro, but the bank does not target the exchange rate. I mean, that's their typical line that they give everybody. Well, every central bank says it. Jay Powell will say it here at the Federal Reserve. They all say it. Yes, we discuss the dollar, the euro, the yen, but we don't target it. No, you're just all in a currency war in a race to the bottom. It's unbelievable. But we have the euro to the dollar trading at $1.18. The dollar index is trading at 93.279 at the time of the podcast. The Great British Pound to the US dollar is at $1.28. Recall, not too long ago, it was trading at about $1.34. Now, we have more Brexit news drama. I'm not going to get in that today, but those of you who understand European history understand that this is just Europe being Europe. Now, I did discuss extensively last year the Brexit drama and everything that was going on. Not so much because it was a geopolitical story, not so much because it had economic and financial market ramifications, which of course it does, but because the UK is supposed to be a beacon of democracy where you allow the people to rule themselves, to govern themselves. And when you have a referendum all the way back in 2016, and the people come out and they vote, and it shocks a lot of people. Oh, we thought you were going to stay in the EU. Nope, we're leaving. You have an obligation as members of the UK government to make good on the will of the people through that referendum. If you don't want to run the risk, then don't give them the referendum. Now, of course, I'm no expert on British politics and what needs to be done to schedule a referendum. But nonetheless, they put one to the people. The people voted. That's what won. That's what you got to go with. So that was always my biggest concern. Because if it's, we got to go back to the polling booth, and you're going to vote until we get the result that we want. Well, that's not how it works. That sounds like something Mussolini would say or Stalin would say. Not something you would expect to hear coming out of the UK. So that's why we focused on it to the degree that we did. But now there was a little bit of a halt, a little pause in discussions because of COVID-19. Now they're starting to pick back up. And of course, now everything's coming out and it's getting a little hairy again with what they're going to be able to agree on, what they're not going to be able to agree on. And that's why you're seeing some of this volatility in the British pound. But that's something to pay attention to as well. On the stock market front, another down day. It was trading up earlier in the day, but then it sold off. Why? Well, because there was some political news here in the United States. The free money train is, it's slowing down. the Senate didn't have enough votes to pass their version of a new spending bill, a few $100 billion. I mean, we throw a few $100 billion around like it's nothing anymore. Great financial crisis, TARP funds, Troubled Asset Relief Program. Hey, well, we need, $700 billion? Well, where'd that number come from? Well, it's just a really big number. We need a big number. Now we're on $300 billion like it's nothing. Well, it is nothing because we've already spent several trillion. So this is nothing. And of course, they couldn't even agree on this because now all of a sudden the Republicans want to pretend that they've grown a spine, that they're worried about the national debt, that they're worried about deficits, that they're worried about future generations. Oh, not the poor children. They didn't care back in March. Oh, no, let's spend several $1 trillion that we don't have. Let's turn the Banana Republic money printing press on. Don't worry about anything there. But now, all of a sudden, they're concerned about it. This is political gamesmanship. This is just both parties trying to one-up each other. The Republicans trying to look like they've finally grown a spine, that they're the fiscal conservatives that they pretend to be. And the Democrats are saying, oh, no, we want it to be $1 trillion, another $2 trillion, because we care about the people. As if money grows on trees. And again, folks, if these idiots in Congress and in the Federal Reserve have stumbled upon the magic sauce, and they have discovered or created the free lunch, then you don't have to pay your taxes anymore, and you don't have to pay your bills anymore. And I'm not joking. This is not tongue-in-cheek. I am as serious as a heart attack. Because if they want to say that you can print money without any consequence, that debts and deficits don't matter, well, then print the money and pay my bills, and I don't need to pay taxes because debts and deficits do not matter. I'm being serious. I hope you understand this. I don't think that these idiots have stumbled upon or have created the free lunch, but if that's the narrative they're going to give us, well, then they got to go all the way with it. You don't got to pay your taxes, you don't got to pay your bills. But we'll see who wins out. We'll see how this plays out. We have a good idea of how this is all going to end, and it's not going to be pretty. But nonetheless, overnight futures trading right now, we have the Dow Jones Industrial Average up about 200 points, representing an increase of about 0.75%. Same for the S&P 500, up about 0.75%. The NASDAQ 100 is gaining 100 points, up 0.9%. The cash trade in Japan is at 0.3 gain of 1%. Mixed bag in Europe. And the Australian cash trade is down about 0.8%. On the share price front, we have Apple losing another 3 percentage points for the day. Tesla getting a little bit back, up a little over 1% for the day. Microsoft losing an additional 2.8%. Amazon down 2.8%. Alphabet, the parent company of Google, losing about 1.4%. Facebook also down to round it out, losing 2% for the day. On the commodity front, we have WTI trading at $37.20 a barrel, Brent at $39.93, natural gas at $2.30. Gold and silver, a little bit of a fluctuating day, if you will, but still range-bound, still consolidating as far as I'm concerned. Spot gold is at $1,939 an ounce. Silver is at $26.67. And to round it out, we have Uncle Sam's 10-year junk note yielding 0.68%, also range-bound over the past few days. I want to get through the Federal Reserve's BS and money stock first, and then we'll get into the initial jobless claims, and then we will close out the podcast with that survey and article from Axios regarding small business. Federal Reserve's balance sheet still north of $7 trillion, standing at $7 trillion, $10 billion, down from the week prior of about $7 billion. But don't worry. M2 money stock gained about $80 billion, and it's now at $18 trillion, $464 billion, making a new high. No surprise, ladies and gentlemen, and of course those idiots will be out next week with the FOMC meeting discussing how everything's okay, that it's okay if there's inflation, and if it runs hot, we don't got to worry about it, and I'm sure I'm sure Jay Powell will continue to beg Congress to, sort of get their act together and spend more money that we don't have so that Jay can really turn that printing press back on and really get their balance sheet rocking and rolling. Because, again, as I stated at the top of the podcast, the sell-off today in the stock market was driven. I mean, that was the news event that turned stocks red from being green earlier in the day when the news came across the wires that said the Senate did not have enough votes to pass their version, the Republican version, of a new spending bill. And that pretty much tells you everything you need to know. Something I have been harping on for months. There is no market. These addicts are addicted to the cheap, free money. And of course, free was never so expensive. Check out that podcast. Free was never so expensive. But that's all they want. There is no market. This is not how it works. You do not wait for the idiots in Washington, D.C. to spend more money to say, oh, well, we can continue our rally. Our up day is justified because there's going to be more money printing, more borrowing, because we don't have it. This is not free market capitalism. I hope you understand this. Okay, so that's the Federal Reserve's balance sheet. We'll, of course, have a discussion next week following the FOMC meeting in what Jay Powell and company has to say, but we pretty much already know what they're going to be discussing. Moving on to the Department of Labor in the initial jobless claims front. We have initial claims coming in at 884,000 for the week ending September 5th. This is a change of 0 from the prior week ending August 29th. Again, also at 884,000. That was revised up by a few thousand. We have continuing claims for the week ending August 29th. Again, this lags a week, of 13,385,000. This is an increase from the prior week of 93,000. Okay? Then if we're looking at the Pandemic Unemployment Assistance Program for the week ending September 5th, we're at about 839,000. This is a week-over-week increase of about 91,000. All right, so it's good to see that initial claims are below 1 million. I believe this is the third time we've seen a number under 1 million in the past month and a half or so. So that's, of course, a good thing on the surface when we're just looking at initial claims data. Now, also, unfortunately, however, the 884,000 was worse than what the market was anticipating. So that's not the good news out of this. But when we add it all up, when we're looking at persons claiming unemployment insurance benefits in all programs, and this is an unadjusted figure, but we're looking at regular state, federal employees, newly discharged veterans, pandemic unemployment assistance, pandemic emergency unemployment compensation, extended benefits, state additional benefits, and work-share program, we have a total of 29,605,000. This is for the week ending August 22nd. This lags a couple weeks, but this is an increase from the prior week of 380,000 individuals. This is moving in the wrong direction. And if you recall last week's podcast on Thursday when we went over this data, the grand total was 29,200,000. And that was an increase from the prior week then of over 2 million. That is in the wrong direction. When we went over the jobs report that came out last Friday, but we did our podcast this Monday because of the holiday weekend, we wanted to look under the hood as we always do. Took the time to read that report in its entirety as we have been doing since April of this year. And it's likely just going to become a monthly tradition here on the Capital News to just read that report in its entirety. Whether we're in a recession, depression, whether it's boomtown, we're just going to do it. That's probably just going to become a regular monthly occurrence here at the Capital News. But when you're looking under the hood, I said, what was that number you have to pay attention to? You have to look at permanent job losers. That is one of the main variables that you got to pay attention to. And it increased by about 500,000 individuals. We're now at about 3.4, 3.5 million permanent job losers since the start of this downturn. Have not seen that number since 2013. That is in the wrong direction. It is not getting better anytime soon. And this is not a V-shaped recovery in the broader economy. Now, when you're looking at this, persons claiming UI benefits in all programs, okay, when you're looking at regular state, week over week, that was a decrease of 724,000. Right direction. That's what you want to see. Pandemic unemployment assistance. For the week ending August 22nd, 14.6 million. That's an increase over the prior week of 1 million individuals, slightly above 1 million. That is not what we want to see. So again, that is where the bulk of individuals are now claiming unemployment insurance benefits, is in the Pandemic Unemployment Assistance Program. This is for your gig workers. This is for your small business owners who typically cannot qualify and do not qualify for your regular state unemployment insurance benefits. It's not what we want to see, because that's why we're talking about a small business pulse check here. Because as I have been stating here for months from the onset, as soon as I didn't know what they were going to call it. Obviously, they're calling it the CARES Act. I call it the Nobody Cares Act. But I knew something was going to come down the pike. Wrote a letter to my congressman, to my senators. It's posted on the Capitol News. Did a podcast on it. You can find it on our YouTube channel. Or go to thecapitalnews.com and read the letter, Representation and Recourse. A warning cry to my elected officials. I don't know what you're going to do, but I know you idiots are going to do something. Don't do it. Don't do it. Because I know you and everybody else are going to use the pandemic to justify the unjustifiable. And that's exactly what's been going on. And it ain't going to stop. Not anytime soon. Don't do it. It's going to cause distortionary effects. And that is what I've been stating to this audience every Thursday for certain, but I know I bring it up in other podcasts as well, that garbage in, garbage out. We are not going to have a full picture of the jobs market, of the job situation in this country, and really globally too, until all of these programs have run their course, the moratoriums are lifted, etc., etc., etc. So I don't know. Is that the case with pandemic unemployment assistance? Is that why we've seen over the past 2 weeks an increase of over 3 million individuals claiming this benefit? That's a big number. Is that because small businesses are going out of business? They've exhausted their PPP loan money? They're laying off their workers? What's going on here? That's the problem. That's why you got to scour. You got to go through all of these different sources to try to piece this puzzle together. And it's not easy. And that's by design, because the government wants the numbers to look as good as possible. But what that does is it sends poor signals out there, because it's poor information. When you got bad information, you're likely going to make a poor decision. It's not because you're not intelligent. It's not because you're an idiot. It's because there's bad information being thrown out there by policymakers trying to delay the inevitable. And we ain't seen the worst of it yet. But we got to pay for it. And again, free was never so expensive. Check that podcast out. So, for the grand total, again, 29,605,000, an increase from the prior week of 380,000. Now on to the article from Axios.com. Small businesses are losing confidence in their survival. This is a survey question. So based on the situation today, do you think your business will survive? This is a survey of participants in Goldman Sachs' 10,000 small businesses survey running from April of this year to September of 2020. So again, the question is, based on the situation today, do you think your business will survive? Those who answered yes is at 65%. This is the lowest figure it has been since the start of the survey. Those who answered don't know is up to 28%, nearing its all-time high going back to the beginning of the survey. Those who answered no is up at 7%, the highest since the survey began back in April. So again, that question is based on the situation today. Do you think your business will survive? So you have that question. The situation today. Well, the situation might change. Maybe things will get better. These numbers will improve. Maybe things get worse and it could go the other way. But that's a good snapshot in time. This is the same survey that has noted that a significant portion of the PPP loans or grants, if, of course, those stipulations were satisfied, you can turn the loan into a grant, stated that most of that was going to be exhausted at the beginning of August. And again, that is sort of lining up with what we're seeing in the past couple of weeks with the grand total of Americans collecting some form of unemployment insurance benefit going up by a few million, because that grand total lags by a couple weeks. So that sort of is making sense. So we're trying to piece it together here. So here's the article. Small businesses have largely exhausted their federal funding and are starting to lay off workers, with many worrying about having to shut their doors for good, according to a new survey from Goldman Sachs provided exclusively to Axios. Why it matters. Business still has not returned to normal 6 months after the coronavirus pandemic first appeared in the U.S., but small firms say the money they receive from the Paycheck Protection Program has run dry. In a survey of 860 Goldman Sachs' 10,000 small businesses alumni conducted September 1st to the 2nd, 88% of the small business owners say they have used all of their PPP loan funding. Again, conducted September 1st through 2nd, 88% of the small business owners say they have used all of their PPP loan funding. That's a big number. Now, it doesn't mean that they might not be able to go get an extension or that they can't go to their bank where they already have a relationship and get a line of credit or another loan, but that remains to be seen. Those are some of the many outstanding questions that remain and are going to persist for quite a while. 32% of loan recipients have already been forced to lay off employees or cut wages. About 95% of the companies surveyed by Goldman Sachs said that they had been approved for PPP funding. That's a good thing. The good news, the pandemic has not been as bad as many businesses had feared, and most are now up and running. Nearly 3/4 of the businesses surveyed said they are fully open, up from just 39% in April and 53% in the month of May. And just 2% of businesses say they are temporarily closed, compared to 19% in April. 25% of businesses say that the pandemic has greatly hurt their finances, down from 33% in April. 21% say the pandemic has not hurt their personal finances, up from 14% in April. So that is the good news. Now, of course, nearly 3/4 of businesses surveyed saying they're fully open. That's a good thing. The question I would still have is, what's the demand picture look like? Is it back to normal? Is it half capacity? What's that full picture going on? Again, that's going to take some time to weed out as well. The bad news, about 1/3 of small businesses Goldman surveyed said they had already laid off workers, and 36% say if no new funding comes from Congress soon, they will lay off workers or cut back hours. I mean, look how dependent everybody is becoming on the government. And the government is broke, folks. The government is broke. That's the tragedy here. This is the economy of the living dead. One zombie company after the next. Just waiting for Congress to do something with money that we don't have. Without additional government funds, 30% say they will exhaust all of their cash reserves by year end. 16% say less than a quarter of their pre-COVID revenue has returned thus far. See, now that's terrible. 16% say less than a quarter of their pre-COVID revenue has returned thus far. So that sort of is starting to answer my question previously with the good news stuff. The 65% of owners who believe their business will survive is the lowest percentage recorded in the survey thus far, down from 73% in July and 68% in April. What we're hearing, small business owners have made their position clear. They need more legislative support, and there is no time to waste, a Goldman Sachs spokesperson tells Axios. The intrigue, the owners blame both sides of the aisle in Washington for the inaction on new relief measures, as they should be blaming both sides. That's music to my ears. When asked who is responsible, 53% blame both parties, while 18% blame congressional Democrats and 16% blame congressional Republicans. Just 8% blame President Trump. Between the lines, data show black-owned businesses face an even steeper climb. 43% say their businesses' cash reserves will be depleted by year end if Congress does not act in September, compared to 30% of respondents overall. 31% say less than a quarter of their pre-COVID revenue has returned. And again, those last two data points were for black-owned businesses. So if you don't get a handle on this, Congress, which of course you don't and you're not going to, I mean, look, folks, we talked yesterday a little bit more extensively about the global protests and looking at the Carnegie Endowment for International Peace, their global protest tracker, and I hope you take the time to do so. Take a look at that. This is coming. They've kicked the can down. They've done a fantastic job of kicking the can down the road, printing up a bunch of Banana Republic funny money just to sort of, let's see if we can get away with this. Let's hope and pray that there's going to be a V-shaped recovery. There isn't. Things are going to get worse and there's a very expensive price tag assigned to all of that money printing. People are going to go ballistic when they lose their businesses, when their towns are, when they just look like ghost towns. Because the doors are closed up, because the money has dried up. But if you're a major corporation, don't worry about it. The Federal Reserve's got your back. The Republicans got your back. The Democrats have your back. The president has your back. Don't worry about it. We'll buy your corporate debt. I'm against that too, ladies and gentlemen, obviously. I'm against all this stuff. But if you're going to buy the corporate debt of Apple and Amazon and Toyota and BMW, and the list goes on and on and on until you count to 800, well, then you should be able to bail out these people too. And again, I don't advocate for that. But where's all the money coming from? And if you have cracked the code, if you've discovered the free lunch, then there shouldn't be any problem. Same thing with the evictions. Up to 40 million Americans potentially facing eviction in the coming months. Well, pay all their rent and the back rent. It's free. There's no negative side effects. So I'm going to be very interested to hear what one of the other demented jokers, Chairman Jay Powell of the Federal Reserve, has to say on next Wednesday, it should be. And of course, he's not going to be pressed hard by any of these financial journalists. But he'll still make some comments on it, and we'll pay attention. But that's sort of the small business pulse check. Again, you can check out this article on Axios.com in relation to the Goldman Sachs survey. It's revealing. It tells us pretty much what we have been discussing here for quite a while. And it's good that you have a significant portion of small businesses somewhat back up and running. But you also always have to understand that even in a recession, it's not 100% of businesses that are shut down. That's not the case. It just takes a small portion of overall businesses to slow down, go out of business, to have a recession or to have a depression. Of course, if it's a depression, then it's, going to be even worse. But when you see those types of numbers, a quarter, 30%, a third, that's your recession. And if it continues, like I think it's going to be, then it turns into what's going to be called the Greatest Depression. So just understand that. There's always going to be somebody in business, somebody operating. There's always a need for some good or service to be produced, and people will still be working. Understand this. But the destruction is going to be enormous, and the duration is going to be significant. And money printing is not the solution. Never has been, never will be. You understand the club. You understand the game. You're not in the club, but you're getting hit over the head with it every day. I try to make this as clear as I can on a daily basis. I'm glad at the end of this survey they're asking these respondents, these small businesses, somewhat, who's to blame? And there's enough blame to go around for everybody. But I'm glad this was more or less a bipartisan issue here. This is not the Republicans or just the Democrats. This is their fault combined. This issue is years in the making. They just conveniently have a pandemic to blame so that they can justify the unjustifiable. But this day of reckoning was coming. It's here. And all we've done is added more debt into a system that was already drowning itself in debt. It's what we did a decade ago following the great financial crisis. It's what we're doing again, and we are expecting, I guess, I don't know, a different result, a better result. But you know what's going to happen. And if you don't, stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.